I actually had a friend of mine put me in touch with a guy who ran a fund at Blackstone at the time. And I said, hey, I'm doing this. He told me, yes, I just want to tell you that what you're doing is very dangerous and you're going to lose all your money.
Your account size now is about 2.6 million.
That's right.
Yes. I can't
Where
believe.
could I be if I'd known
when I was 22 or 23.
8 years ago. That's right. Yeah. Super complicated initially. I know one of the first searches that comes up was Mike and his whiteboard.
I can do this.
I can try this.
So 2023, you make 61%. 2024, you make 45%. That's right. Top strategies. Hello, everybody. We are back for another Rising Star segment today, and this one's going to be fun. Jonathan, welcome to Tasty.
Thank you. Great to be here.
First of all, you are our first Oxford University grad.
Yes, thank you.
I visited Oxford. It's beautiful. I visited Cambridge. I didn't know you could only apply to one of the two schools.
Yeah, that's right.
How'd you choose Oxford over Cambridge?
It was really very simple. Cambridge just had a straight economics degree.
Yes.
Oxford had an economics and management degree, and I wanted that management finance side of it as well. And so that's how I ended up.
So this is 2012, you graduate there.
That's right.
And you didn't start trading for a while, which is cool. But right after school, you kind of got into the, I assume that Oxford grads are highly sought after, and you decided, I'm going to go, I guess, right to the top of the food chain. So you essentially worked your way up to Blackstone, and what'd you do there?
I worked in their real estate debt strategies business. So commercial real estate finance in various different guises.
So what would you do? For example, like what does a new grad do at a place like Blackstone?
So a lot of it involves underwriting, Excel modeling, presentation making for investments where we would finance, a commercial real estate building, so a hotel,
sure,
a multifamily asset, office buildings for private equity buyers that need financing.
What was so interesting about like real estate? Now, I know you're in the UK, so that some of the other options with respect to the world of finance are a little more limited. I've learned a lot about market structure and since we're bought out by a UK company and since we're publicly traded in London, I've learned more.
Yeah.
Whatever I've learned scares the hell out of me. But that said, and so I understand there's limitations there. Maybe not limitations, but there's different kinds of opportunity in the UK and in Europe than there might be in the US.
Yeah.
But why real estate?
To me, real estate was always something that everybody has to deal with in some way. Everybody has to live somewhere. Everybody has to work somewhere.
But yet you don't own any place.
I don't own any place. That's right.
You're homeless.
I am technically homeless right now.
Okay.
Yes,
Yeah.
we'll get into that. But
Okay.
that's exactly right. And the way that real estate investors look at the world is actually generally a little bit different to the way the rest of the investment world works. So because it's real estate, it's illiquid. So the hardest thing to figure out is what is something worth. Versus in public markets, it's the other way around, right? You know exactly what the price is. How can I make a return out of that? And so the way that world is flipped creates a whole different puzzle that you're trying to solve. And I thought that was super fascinating to me at the time. Yeah,
that's fair. I mean, you're young. You don't know anything yet.
That's right. That's right.
You're just out of school, and you think you're smart as hell, but you're not exactly sure because you haven't really been tested. So you're learning on the go. So 5-6 years. How much time in total from till about what was it till like 2020-ish?
I left Blackstone at the end of 2021. Started there in 2013. So I was there almost 9 years.
Almost 9 years. That's a long time.
That's right.
That's a long time. You get to travel the world. You get to see a lot of different deals go down.
Yeah.
You get to learn a lot.
Yeah, I got to see it from the London, UK side, and I got to see it from the New York side, and I got to see also, how the world
Okay.
differs.
What did you love about that business and what did you hate about it? Because it leads into kind of the next steps.
Yeah, I love the fact that we were a big group of people that generally all sort of had the same goals, right?
Yeah, sure.
And we were all maybe similar to when you were in the trading pits in Chicago. There's a camaraderie when you're sitting there late analyzing stuff, and the people that I started my career with are great friends of mine still, and that is really valuable to me, and I really cared about that. Um, the other side of it was that I felt like I got to learn from people who were the smartest and best in the industry. And as a result, I get to really sort of see how they think. And that's something that I find really interesting.
Okay.
Why are
Now,
people doing what they
what
do?
about the negative side?
You learn in dog years and you live in dog years. And it's very demanding. It's not always as thankful a job as you would
So 1 year
think it
felt
is.
like 7 years.
Yeah.
Fast forward now, and it's 2020-ish, and all of a sudden, you searching you're searching online somehow. Um, I'm not exactly sure how, but you stumble across Mike and his whiteboard.
Yeah. I actually started with investing. I had a brokerage account and I wanted to be a little bit more active. And so um,
You had a UK brokerage account.
I had a UK brokerage account,
Yeah.
right? Very expensive to make individual trades, and
Yeah.
you can only really trade ETFs, and I was only
Yeah.
really ever allowed to trade ETFs
Sure.
anyway. And so the idea of this clever stock picker who could pick the right stock and it goes up was always
Sure.
fascinating to me. Realized very quickly that half the time I was wrong, and I have to sit on my hands for most of the time. And I wanted to be much more active, much more involved. It was like watching paint dry just sitting there.
Yeah. I mean, you're smarter than the average bear, so you need to be, you need to be playing because
Yeah.
you've got to show off your skills. I completely understand.
And as a result, was looking into options trading, and searched on Google, searched on YouTube, and actually one of the first searches that comes up was Mike and his whiteboard, Mike and his wonderful whiteboard. And
When I grew up, it was Harold and the Purple Crayon was the book I grew up on as a kid. So I can relate to Mike and his whiteboard because I was Harold and the Purple Crayon.
yeah, he's the Harold and the Purple Crayon
Yeah.
for us younger millennials. That's right.
Yeah.
And it sounded super complicated initially. I'd taken some finance classes at university, right? Sounded super complicated, super fun, and super active.
There was
And
nothing
I
like
loved
Mike and his whiteboard at Oxford.
No, I had a finance professor who actually, for that finance class, I had to basically draw a bunch of call and put payoff diagrams. That was the finance class that I had. So I remembered all of the diagrams, but the practical application of it
Sure.
just didn't really exist.
Got it.
Yeah.
And that's cool. All right, now it's making sense. So you're watching this, you're like, okay, this is kind of interesting.
Yeah.
This is kind of cool. I could do this.
Yeah, that's right. I can try this. And initially started, I think, like most people, risk defined.
How much money?
I started with a relatively meaningful amount, about 500K.
That's a lot.
Because I wanted to really tell myself that what I was doing before, just buying ETFs and hoping that
Sure.
they go up, and 50% of the time being wrong, really wasn't leading me anywhere. So maybe if I take control of this,
What are we, 2021 now?
yeah, we're probably late 2019, early 2020.
Okay.
And then obviously, beginning of 2020, I'm selling skewed strangles on, ES and Q, those types of things. And
So you're living in London. London?
no, I'm in New York at that time.
Oh, you're in New York.
I'm in New York.
Okay,
Yes,
so Blackstone moved you to New York.
Blackstone moved me to New York.
I got it.
That's right.
Okay.
That's right.
Okay. So you're living in New York. You are trading. You're still at Blackstone.
Yes,
You can only trade ETFs, probably because some of their compliance rules.
that's right. ETFs and futures, and that's why I ended up with futures. And
Right.
the span margin was
Right.
phenomenal, right?
Right. But you're in a different world. The people there are probably like, Jonathan, you're out of your mind. We don't even want to know.
I actually remember that I spoke to some of the, hedge fund trader folks
Yeah.
at Blackstone at the time.
Yeah.
And sort of said, hey, actually, I've stumbled across this, and I'm trading options, and I've got portfolio margin, and I think this is really cool and it's really fun, and look at how well it works. And they told me that I'm crazy. They told me that I'm guaranteed to lose my money.
Of course.
I actually had a friend of mine put me in touch with a guy who ran a fund.
Okay.
And we spoke for 10 minutes, and I said, hey, I'm doing this. And he told me, yes, this friend of yours told me about you. I just want to tell you that what you're doing is very dangerous, and you're going to lose all your money.
It's great.
And then he
He
said,
didn't have you admit.
thank you and goodbye.
He didn't have you admitted to Bellevue or something like that, to the psych ward or something. Good. That's good.
Yeah.
Well, they're professionals. That's their business.
That's right.
Yeah. So I love that. So that's great, because you kind of need somebody to tell you that you're out of your mind in order for you to really know that you're stumbling into
And
something.
to really want it.
Of
And to
course.
really want it.
And because that's a challenge.
Yes,
That's
exactly.
the challenge. That's now you have a hurdle.
Exactly.
Now you have something on the bulletin board where you can say, now I have to have something to prove.
Exactly.
Okay. So on a $500,000 account, I'm gonna give the exact number, you make 39.8%. Now you're like, okay, A, it's liquid. B, I'm active. So I'm actually, so I'm experiencing this. I'm making a lot of decisions.
Yeah.
I'm understanding risk. I'm understanding derivatives, market structure. I'm skewing strangles. At Blackstone, this entire firm, there's nobody else doing what I'm doing. No chance there's another person here doing it. Zero chance. That's not the way anybody thinks.
Yeah.
Making my 40%, easy peasy, simple. Like, I can't believe I know what's going through your head, because let's see, now you're 2021, you're 30, 31 years old. What is going through your head at this point, just tell me if I'm right. Oh my God, I can't believe I didn't know about this earlier.
100%. Yes.
I can't.
Where could I be if I'd known
When I
about
was
this
22
6,
or
7,
23.
8 years ago? That's right.
Why didn't anybody tell me about this? How did I have to stumble on this on my own? How did I not know about this? And how come nobody told me?
Yeah.
Okay, exactly. And nobody else at Blackstone has any idea. And you're off in the you make almost 200 grand, whatever it is, and you're thinking to yourself, okay, like what did I miss? All this kind of stuff. But now I could be off on my timing, but you then decide, okay, it's time for me to move on.
Yeah. Yeah.
And it's time for you to move on because A, I love this training thing, and B, because of the training thing, I think it maybe empowered you a little bit to try I'm going to roll the dice and do this on my own, business-wise.
Yeah. It gave me a little bit of the confidence to back myself, bet on myself,
Okay.
and say, let's try something
Are you
else.
in New York or London?
I was in New York.
You're in New York. Okay. And what'd you do?
I joined an accelerator, set up a startup for a national residential mortgage lending at the start of 2022.
So you went to an incubator, kind of like
That's
a
right.
a co-working facility.
Yeah, that's right.
Yeah.
That's right. They backed me with a small amount of money and gave me a little bit of
Office space.
office space and expertise,
Yeah.
and
A little advisor,
advice.
mentor.
Exactly. Yes.
Okay.
Meanwhile, I was still.
What was the
actively
incubator? Do you
trading.
remember the name?
It was called On Deck. Yeah.
On Deck.
Yeah.
Okay, got it.
Beginning of 2022 is a difficult time for markets,
Sure.
difficult time for, the tech world.
But you're young. You don't care.
Right, exactly.
Because you have nothing to lose.
That's right.
You got trading in your back pocket. You got experience. You're a smart guy. And if anybody else can do it, you can do it.
Sure.
Of course.
Sure.
Listen,
Of course.
there's nothing wrong with that.
That's right. That's right.
Yeah.
And then, obviously because I was part of this tech accelerator, got exposure to, a lot of believers in these, early stage tech startups.
Sure.
I'd throughout my career never been able to trade single names. And so on the trading side, it was something where, okay, I could finally do these single names.
Sure. I can finally trade Tesla. I can
finally trade
NVIDIA. I can finally trade
Peloton, everything.
Sure.
And, I did exactly as you can expect. I got too big. I believed, folks telling me Peloton was going to be the next. Yeah. Peloton was going to be the next Nike, all of those things got too big. And I think that was really, at the same time, spending a lot of time on the startup stuff. So you're probably a little bit mentally distracted.
2022 was a tough year.
Yeah.
You tried to start up. It didn't work.
That's right.
You learn a lot from us. You realize none of this stuff is easy. No. Like the most impressive thing about trying a startup is that you try it because it's really hard to do. But at where you are in your life, I don't blame you one bit. It's the best time to try it. But you realize none of this stuff's easy. Then after the startup, now you think you're leaning on your trading, and then that falls apart.
Yeah. Yeah. So
how much did you lose in 2022?
I was at my worst down just over 40%. And, that was right around sort of the time that, the startup was also falling apart. And, I made the decision to pack that in.
You're in crash mode.
Yeah. Yeah. And I remember, at that point, I'm not, feeling great during the day. It's on my mind when I fall asleep. And I remember, I think there was actually an episode that you had where you said, if I can't, sleep at night, if I get too big, just, immediately reduce your positions.
Yeah. Reduce your size.
And I went further because I figured what I'm doing here isn't really getting me any further. The strategy that had worked so well for me previously was, trading the futures options. So, from indices to currencies and bonds and everything. No single names. Let's go back to what worked. And so I closed everything. I just wiped the slate clean entirely. And then from there, the second half of the year came back and was up from, that down position. I think ended up that second half of the year up about, 35% from that reduced position. So
you ended up losing about 30% for the year.
That's right.
But you came back nice. You gave yourself a little confidence back. You got rid of it. You closed down your startup.
Yeah.
And essentially now
I'm back in London. I'm sort of back in the real estate industry. Spending time there, giving myself a little bit of a respite from all of the things that happened in the first half of 2022.
Building up your confidence, building up your equity,
exactly.
You're making some money.
Exactly.
Okay.
Exactly. And the trading thing is slowly working again. The best part of those things, you always say that traders only remember their worst trades. They don't remember their best trades.
Of course.
And it's exactly the same thing here. I remember my awful part of 2022 like it was yesterday, but the best part was just finally seeing green numbers again.
Yeah.
And that gave me a little bit of the confidence back that, stick to the script, stick to the strategy,
Love it.
Stay confident.
So just to push things along, so 2023, you make 61%.
Yes.
That's a pretty nice comeback. So almost 40% in 2021, down 30% in 2022. 2023, you make 61%. You add some money to your account. 2024, you make 45%.
That's right.
And at that point, you're like, I got this. You quit your job. You're a full-time trader. 2025, you're up about 13, 14%.
Yes. Yeah, 13,
Yeah.
14.
And your account size now is about 2.6 million.
That's right.
So you're 13, 14% on 2.6 million is a real number. And all those numbers are real numbers because they're all on, significant amount of capital. So your life's changed.
Yeah.
And you've learned a lot along the way. First of all, let's talk about kind of the top strategies mostly the strategies that you use. And then let's talk about the underlyings that you're trading now, because, the reason you're on the Rising Star segment today is 61% in 23, 45% in 24, up a decent amount we're only 6 weeks into the year.
Yeah.
So it's great. All right. Top strategies.
Short puts with shorter dated, lower delta calls. So effectively skewed strangles.
Short puts with short calls, just lower delta short calls.
That's right. But what I'll also sometimes do is take a short put that's slightly longer dated, 40 to 50, 40 to 60 DTE, and then layer a short call that's maybe 25 to 30 DTE.
Sure.
On top.
Yeah, you can mix and match. The beautiful thing about the technology today and all the technology you built is it's completely everything is just user defined.
Exactly.
I mean, it's you can't believe how bad everything used to be and how good it is today.
Yeah.
Just in the flexibility of what you can create position wise.
And how good it is using, a brokerage like Tasty versus, other things that are out there.
Oh God, yeah.
Right.
Yeah.
It's night and day, and you have the flexibility to do, trades like
But
these.
what are you trading? Like what underlying? Obviously equities, futures, options. What are you doing?
Yeah, I'll pretty much 95% stick to futures options. So really across all the products, although, I don't think anyone is great at trading the ags, but
No. Godspeed with the eggs. I've never figured it out. It's been 40 years.
Right.
Yeah.
So no hope for me then. But what that allows me to do is to go where the price extremes are and where the volatility extremes are. So
what if there's no extremes? What if the futures are a little dead?
I mean, right now is a good time where I'll probably stick to some debit spreads.
Mm-hmm.
And then maybe a small amount of.
How often are you trading?
I do a daily, probably somewhere between 5 and 10 trades.
5 to 10 trades every single day.
Yeah.
Yeah. And are you trading any equities or ETFs right now? Indexes?
I'll do on equities. I'm slowly, very, very, very selectively adding some small single names, but really mostly still sticking with the futures because the span margin that allows capital efficiency so well, as well as the tax efficiency as well, is hugely beneficial, and that I think makes it very very palatable for me. Yeah.
So your parents were really proud of you when you got into Oxford. Are they proud of you that you're a trader now? Are they wondering what the hell you're doing?
Yes, the latter.
Yeah.
I think they are happy that I'm doing what I love, and that I'm energized and care about it greatly, and that I'm not sitting in an office till 1 a.m. every day.
Yeah.
But I think it's still a nut to crack for me to explain to them what I'm doing. My dream, what I'd love to do, is really get everybody in my family to become a Tasty trader in some way.
Sure. But what this has also led you to want to do is to get back into, is to raise capital, to get back into, like, what I wanted to get to was, you've kind of come full circle. Like,
Yeah.
like right out of school, you get right into business before you really, but that's just the nature of how everything works and how everything's ever been done. But before you really know anything, before you've networked, before you've learned anything really about finance, you're knee deep. You think you know everything, but you don't, you realize you don't know anything. And it took you, which is totally normal, let's just say 10 years to figure it all out.
Yeah.
10 years you figure it out. And with the trading now, you probably think much more probabilistically, statistically, like you really, you kind of understand what's bullshit and what's not. Compared to when you first get out, you don't realize it's kind of all bullshit. And now you realize what's real and what's bullshit.
And you stick with a decision.
Yeah.
You live with the consequences, and you effectively eat what you kill in that regard.
I've been eating what I kill for 40 some odd years. It's absolutely I think I've used that term plenty. It's so important.
Yeah.
But now if you go back, now you're the perfect age. Now you have, you're seasoned in a whole different way. You're experienced and you've learned risk. You've learned all about risk very differently. Now you want to go back, raise capital and, complement what you're doing.
Yeah, I've become a public equity truther,
A truther.
so to
Love it.
speak. That's right. And
Explain that.
so I've realized that in public equities, really what you see is what you get. And I think in private markets, that's not always the case. I think what you see is a little bit of things that people can sometimes get to different valuations. People can sometimes
It's called making up a valuation.
yeah.
Yeah.
That's
One of the things
right.
I
No
would
words,
say-
not mine.
One of the things I always said about why people go, why did all these companies stay private? I go, because then they can tell you what they're worth
Exactly.
rather than the market telling you what they're worth.
Exactly.
Yeah.
Exactly. And it's similar to I think one of the points that I mentioned at the beginning, where in real estate, people determine what the price is.
Yes.
Versus in public markets, obviously the price is given. And I'd like to find a way to combine, my love for real estate, my excitement for real estate, my career expertise in those things, and combine it with a, public equities trading strategy.
An exchange-based real estate market, kind of like,
Yeah.
you would destroy the equity in the world, just so you know, because prices would be normalized.
Or at least trading, some sort of real estate equities in a way that, makes sense to me.
Yeah, I've always had crazy ideas about, I don't think you can put real estate on an exchange the same way, but I always thought that there was ways to create derivatives of,
Yeah.
so that the derivatives could trade exchange-based, not the underlying.
Yeah, I think that's right. I also think that there's, because, 80% of real estate is traded in private markets, I think that there's probably something to be said for the information that you can glean on the private market side to, inform, sectors, market weightings on the public equity side.
How much more valuable do you think a group of incoming Oxford grads or any grads would be to a firm like Blackstone or any other big private equity firm if they, instead of saying, hey, you probably shouldn't trade, hey, you should trade. Like, here, go here, take this $10,000 or whatever it is and go lose it.
Yeah.
Rather than me giving you a $10,000 bonus or whatever it is and saying, hey, stick this away for 50 years, take this and try to lose it. Like, try to do something with it. I don't care what it is, but just learn what market structure is all about.
One thing that I think we learn at university, and that, maybe we learn in our early days of our careers, especially on the private equity side,
Sure.
is we learn the theoretical side of things. And what you realize is that the practical side of things is crucial. And understanding how to react in different environments, how products move together. how bonds move compared to gold, how that affects currencies, or how currencies affect bonds, and energy and rates markets, how that affects equities, is something that I don't feel I was ever able to learn if I hadn't looked for it myself and traded actively to understand those relationships.
The most successful entrepreneurs are not 22 to 27-year-olds. They're like 37 to 42-year-olds when they start out. Like that's the sweet spot, because they have some experience and some failures. And it's those failures and it's that other networking or that other work experience that you actually need. It's kind of the maturation process, right, that you need to learn from. It's so interesting when you look back, like your next startup is going to be crazy successful because of what just happened over the last 5 years.
Yeah. A lot of these things, I think, come down to perspective. You have a lot of it. And it's super valuable. You don't want to get too excited when things are great. You want to get slapped down a little bit. But then when things go really badly, you need to have the perspective to say, hey, we can move forward from this.
In the real estate world, you don't get slapped down a lot because you don't have to sell.
Exactly.
In the trading world, especially the option world where everything expires in a few weeks or month or whatever, you get slapped down a lot.
Oh, yeah.
The stocks win and they teach you very valuable lessons in a very short period of time. And it does change your perspective on finance and how everything is, how everything's done. Well, that was, Jonathan, that was great. That was a lot of fun.
Thank you.
Very different story. I love it. I think it's really going to resonate. Thanks so much.
Thank you. It's been a pleasure. It's been a real pleasure. Thank you.
If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.